There's some invisible threshold that you pass, and it just makes you more at risk of either getting your credit limit reduced or
Yeah.
just getting this account shut down. Listen, I've had so many, even of my own audience members, who had
Yeah.
multiple accounts shut down at the same time.
Yeah. Wow. What's going on, guys? Calvin Russell here. Super excited to bring again. You guys have seen this young man on our channel before, but listen, he's got some new information to share, and I wanted to make sure that he most definitely shared it with the audience today, as this is some information that's going to impact you and most definitely make some changes on how you move around your money, and as you all may be affected by some of these banks. But either way, of course, we don't have a lot of time on his schedule. Most definitely got to take advantage of what we have. But if there's anyone that knows these credit cards in and out, I read his newsletters all the time, and he's one of the few people with information that I know is researched and I know is trusted. But either way, without any further ado, want to go ahead and bring back to the channel Mr. Cal Barton. Cal, can you hear us okay?
Yes, sir. Thanks for having me back, Calvin. It's really good to be in front of your audience. And yeah, I want to share these data points with them.
Absolutely, man. Absolutely. And I'm glad you mentioned that too. I don't know if you guys heard that. He said data points. Okay. And so, real quick, Cal, just break down what exactly is a data point. And then let's go right into after that, two banks that people should avoid right now because they are closing credit card accounts. You can go ahead and
Mhm.
jump in when you're ready.
Yeah, so a data point generally is in the credit card community a term that has a general broad meaning. Just a data point is anything like your credit score, what credit limit you were approved for in opening a card, what credit bureau that bank pulls from. It could be a lot of those factors. It's basically just helping out the community, sharing your kind of giving a testimonial, but giving really hard evidence about what that approval looked like or what that denial looked like or what that
Yeah.
credit limit increase looked like so other people can see that data and help them make a more educated decision, when they're trying to go for more credit.
Absolutely. Absolutely. Because, man, there's so much information that's out here, whether it's on YouTube or whether some people saw something on TikTok or something that's trending. And I don't think people do enough research to see if things are accurate or not, or they don't look to see if, in fact, that they actually got data points, from someone and not just saying something random, So I know, of course, I never have to worry about that with you. I can just tell, you heavily research this stuff. But listen, I most definitely want to make sure everyone knows exactly what banks they need to. I don't know if they should avoid them or if you feel like they should avoid them or what they need to prepare for. But what are these two banks that's just, man, closing these credit card
Mhm.
accounts left and right?
Mhm. Yeah, over the last year, I looked at about 30 different testimonials about people who had their accounts either credit limits were decreased or slashed or their accounts were closed. The runner-up bank, we all know, and most people hate, which is Capital One, they were known to shut down accounts at a higher frequency than the other large banks. I believe Capital One is the number 4 by volume as far, credit card transaction
Wow.
volume in
Yeah.
the country.
Yeah.
And basically 3 large reasons for closing down accounts. I'll tell you that right now.
Real quick, if you haven't done so already, be sure to download our free ebook. You can actually scan this QR code or you can click the link in the description below. Now back to the video.
The third reason is high usage. So if you are using a large percentage of your available credit limit, let's say 90%, 100%, and maxing that card out, that's going to be one of the things that Capital One may not like to see based on your particular credit profile. Number 2 was fraud. And so I saw this maybe once or twice. It still was more than average for, for a testimonial for a bank. And so basically, the card was used in a strange way, maybe a strange location, or you were running up the activity on the card looked like you were doing some illegal activity. I've seen
Yeah.
situations where somebody you put on as an authorized user, maybe from out of state, and their activity looks strange to them. So they're using these algorithms to flag your account. And typically, I've seen that the algorithm can actually do the shutdown. So they don't even have to have
A
a
person do
human
that.
being to
Wow.
go in and review that. The
Yeah.
algorithm could do it. And then number 1, which was interesting to me because this was very different from other companies, was returned payments. So, the number 1 way that a bank is assessing you to approve you for credit is they're going to be looking at how you can cover that debt. And so they're
Mm,
looking at your income. They want to see those payments because that's how they're going to, get paid back on the loans that they're giving you every month. And
right.
so if somebody had a returned payment happen even once, they're shown a much higher likelihood of getting that account shut down. So a return
Mm,
payment, just so you know, is basically you initiate the payment, but it doesn't fully complete. So the
mm,
payment, maybe you have the wrong account associated, maybe it's an old account, or the money's not there.
yeah.
And so it'll bounce back. And so that's going to be a reason for account shutdown.
Wow, man. Okay, man. So now, okay, are you starting to see this? Assuming I know things change all the time, So have you been seeing this with some other banks as well, or do you feel like Capital One has been doing this like as of recently, maybe because of the economy or something, or what do you think that
Mhm.
is?
Because I didn't go further back than a year,
Okay,
I
a
couldn't
pattern.
tell you whether a trend was happening, but,
Got you.
Capital One, I think there's so many people with Capital One cards,
Yeah.
it makes sense to see them represented. But again, they were overrepresented more than a Chase or Bank of America or Wells Fargo. They,
Mm.
by and large, had more people getting those accounts shut down.
Wow, that is insane. That is
Mhm,
insane. And what's crazy too is that Capital One, like you said, number 4 in overall credit card volume. And you and I both know a lot of that comes from the subprime market, and man, that's crazy. And a lot of people have Capital One because that's usually a lot of people's first credit card, like their
yep,
first, I would say, reasonable. Like we know that
yep.
that credit card is better than First Premier,
A Credit
Mission
One,
Lane. What'd you say?
Credit One.
Yeah, man. The list goes on.
Yep,
I think
yep,
that that's like, to me, that's like my foot in the door because it's one of the few cards that don't have an annual fee, and that really gives an opportunity for people who are
mhm,
rebuilding their credit or starting out their credit. So a lot of people start with Capital One. So that is
mhm.
crazy news, man. So make sure you guys are, again, looking out for those things, avoiding those things so you don't get your credit card account closed. And then, of course, what was the other bank, or unless there's anything else
Mhm.
additional about Capital One?
Well, I'll just say this about Capital. I think it's
Yeah.
somewhat misunderstood because, like you said, they give people a chance to get in the door, start
Yeah.
building credit. And I think a lot of people don't really understand that that is the redeeming quality for
Mm,
Capital One, is that they let you do that. Now, they don't necessarily let you grow as your credit profile improves, but at
mhm.
least they let you get your foot in the door and get a revolving account and start making some good payments. But the next bank, and this is the top bank for closures, is going to be Synchrony Bank. A
Mm.
lot of people know about it. It's the big bank that handles all the store cards.
It is.
Yeah. And so they have over 100, I believe, 100 and something store card partnerships, and they shut you down. The third reason is return payments, just like Capital One.
Mm,
It's going to be return payments. Then number two is something different. It's credit exposure. So
mm,
basically, that means that if you have multiple cards that are issued by Synchrony Bank,
yeah,
then that's going to add to your overall exposure to Synchrony Bank. So let's say you have a PayPal MasterCard and you have an Amazon store card,
yeah.
or and a Venmo Visa card. You have all three. Even if you have just $10,000 in available credit with each,
Mm,
that's going to be a $30,000 credit exposure to Synchrony. And so
mm,
what people have seen is that Synchrony won't stop you from signing up for cards. In fact, they're very liberal with, getting you approved and getting you higher credit limits, but that just raises your exposure to them.
mm,
And there's some invisible threshold that you pass, and it just makes you more at risk of either getting your credit limit reduced or
yeah,
just getting this account shut down. Listen, I've had so many, even of my own audience members, who had,
yeah,
multiple accounts shut down at the
mm,
same time.
yeah. Wow.
It's unbelievable.
Yeah. And a lot of
Um,
people don't know too that Synchrony Bank is the bank that is for Google, as well
yes,
too. But back in
yes.
the day when I was looking at, comparing phones, and Google had the Pixel. And back then you either paid for a phone outright because there wasn't with a network, or you essentially went through Synchrony. And Synchrony does so many things, and you see a lot of people getting veneers and dental work and stuff. Synchrony's behind that, so it's huge, man. Just like you mentioned, so Synchrony is behind closed doors. Nothing too is that they partner with a lot of dealerships when people can't afford the car repairs, because car repairs are going through the roof right now, and they're partnering with a lot of dealerships, for people to get, those types of cards. So, I mean, it's crazy, what's happening. And so to work hard to get your score up, to fill out that application, get that hard inquiry, get that card, and then just to have it closed is just something that, man, a lot of people,
Mhm.
I don't think, would like that at all. So that's horrible.
Yep, yep. Yeah,
All
I
right.
agree.
Yeah. And
And
then what's that other bank you mentioned?
well, I just want to say the number
Yeah.
one reason with Synchrony to get your account closed is high usage. So basically, again, if you use up to the max, so let's say you have $1,000 available credit limit
Yeah.
and you use $950, that's going to really put you at risk with Synchrony. You want to pay that off as soon as possible. Ideally, you want to keep it below 10%, but If you can't, just get it paid off as soon as possible, because Synchrony is known for being really sensitive. They're sensitive to high usage, and they don't really leave you much room. That's why it's always good to diversify who you bank with. I always say it's good to bank with multiple institutions, credit unions, fintechs, and then community banks. You want to bank with, other players, other companies, so that you can limit your risk and your own exposure
Yeah.
to getting shut down, or even your credit limit being decreased. So what they can do is let's say you have a $10,000 limit and you have high usage. They tend to lower that limit as you pay it off. They'll lower it from 10,000 down to 5,000 if you paid it down that much,
Mm.
and they'll even lower it down to $500 even. So
And I've seen that, especially like with some of the department store cards, like, furniture cards. Obviously, you're not buying furniture, every year or, every 6 months or whatever. And it's almost like they take it personal, or they have to pay for us to have access to something in a sense. Like, I've
mhm.
never gotten that. I've never understood, if a person qualifies and nothing has changed with their lives financially, why just take that away from them? Because essentially you're missing out on that opportunity to increase the chances that someone's going to actually use the card. The chances to me are lower if you're lowering my limit. Now I want to close the account. So
Yeah, for sure. Yeah, it's pretty savage what they do.
yeah. All right. And okay. So, man, I greatly appreciate you sharing that part of the information as well. And listen, guys, this is why we keep bringing Cal back to the channel, because he knows this information. We have to have people that are essentially keeping their ear to the ground and preparing us. Because here's the thing, guys. And this year in 2024, I no longer want you all to be surprised. We need to start being prepared. Okay. We need to start being prepared. So I don't want us to be surprised or shocked. We have to start preparing for what these banks are going to do, because they're going to just be doing whatever they want to do. Right. And so we need to make sure that we're prepared for that. All right. And so another way to prepare for that is to know which new companies, or which companies have made some new changes essentially with their high limit credit cards. So what are some credit card companies with the highest credit card limits right now?
Oh yeah. So I actually analyzed 100 different data points over the
Wow.
last year. I reviewed them by credit card company, credit card. So they're going to be different by, even within the same bank, they'll offer, 10 different products, and they're going to have different available credit, like highest limit for each
Yeah.
card.
Yeah.
You have to remember that. Starting limit, first time to first increase, time to last increase amount, final credit limit, credit score, and number of revolving accounts. So here's the thing. If you want to start with the highest starting limit, people with the starting limit over $10,000 ended up raising their limit up to $26,193 on average. So that
Wow.
means that if you start off with a very high limit, you're going to be more likely to end up,
Mm.
in the coming months and years with the highest likelihood of an extremely high limit.
Yeah.
Um, and so what
Mm.
I found is that Capital One
Mm.
in general had the most cards. It's surprising, right? Capital
Mm.
One had the most cards with over a $10,000 starting limit. And
Wow.
that's because of their Venture X card that they launched. It
Got
seems
you.
like, yeah, it seems like they threw the kitchen sink at that Venture X card, because, yeah, they really did. It's a great card. I have the
Yeah.
card myself, but a lot of people are getting started at 10, 20, or even $30,000 limits with that card. And
Yeah.
here's something else I noticed with that is that even people who maybe were college students or fresh out of college, that's their best shot, best chance of getting a high limit credit card with that Capital One Venture X, because Capital One is looking for people with low revolving accounts. They're
Mhm.
prioritizing people early in their journey. I found that if you're early in
Mm.
your journey and you have good credit, and let's say you have some authorized user accounts that you're part of with your
Yep.
family, then you're likely to get some high limits even with lower income.
Wow.
Yeah.
Wow. And you know what? You touched on something big. And I think that a lot of people, it's almost like college recruiting, like for football or a basketball team or something. You're catching people early. Before Obama was in office, they used to, man, get us at the college level.
Mhm.
And they knew people didn't have any income. They didn't have a credit score. They didn't have any work history. They didn't have
Yeah.
any savings. And they were just pumping out these credit cards. And so they
Yep.
came out with that credit card act of 2009, and that we know which kept that from happening. But saying that to say, like I said earlier, Capital One is usually a lot of people's, they start off with that. And for them to start off with that and then still be with them with their journey, they have an idea of what that financial, like those habits are, what they're
Mhm.
doing and things of that sort. And not
Mhm.
only that, but those are, I'm sure, some of the first people that they're looking at to say, hey, maybe you should
Mhm.
consider the Quicksilver, or maybe you should consider the Venture X,
Mhm.
So
Mhm.
I think that's most definitely a very smart marketing strategy to get in early.
Mhm. And I just want to give a recommendation to that. I think from what I've been learning, I think if you're just starting out,
Yeah.
and you need to build some credit, I think going Discover It, or
Mm,
Discover It Secured card is a better
yeah.
route, because that's
Mm,
more likely to graduate in 7 months.
yeah.
And then it has been shown to grow with you. So people have been taking that $500 limit and
Mhm.
growing up to 20K. With Capital One, it's much harder, if not impossible. So if you want to go the Capital One route, I would
Yeah.
say to have good credit established and have those authorized users that you're part of,
Yeah.
and then go in, or go in like I did with excellent credit. And when I went into Capital One, I didn't have this issue with them. I was very surprised when I started really digging into the weeds here.
Yeah.
But I went in with a Quicksilver card with a $15,000 limit. That was like my fourth or fifth card,
Yeah.
and I already had good credit established.
Wow. And you know what, man, you know what, too? That was even for a lot of my clients, that would be a part of, I won't say the strategy, but it was almost expected. Once you had like a Capital One card, maybe another card, usually that's when Chase Freedom used to come in. That's when Discover It, would come in, and they would always give higher limits, like, 2,000, 5,000, at least higher than, the entry level 300 and 500 that a lot of those entry level cards would do it. So I think that's most definitely a good transition, especially to build that
Mhm.
relationship early with someone like Discover Card. What are those other banks that are giving high limits right now?
Sure. So if we're sticking to the first point, which is the highest starting limit,
Yeah.
I found that Amex, specifically the Amex Blue Cash Preferred, had the highest
Mm,
starting limit. They had a limit of $31,300 to start off with Amex.
okay.
And you're going to see Amex show up a lot later. So take note of that. As far as the time to the first credit
Yeah.
limit increase, so you basically want this time frame to be as short as possible. So, as soon as you sign up, you want to be able to increase your limit within a month or so,
Yeah.
or just a couple of months. Most banks are going to make you wait on average, or I should say median time is 6 months.
Okay.
It usually will divide into two camps. Some banks will make you wait 3 months.
Hmm.
Others will make you wait 6 months. And I found that Amex, again, comes in the top spot for allowing people to increase their limit in 3 months or fewer.
Mm.
Yep. And Synchrony Bank, surprisingly, comes in second place on that front.
Wow. Okay.
Yep.
Okay. Okay. So there's second place. Does that mean there's second place as far as high limits in general?
In time to increase your limit. So
Got it.
basically, how
Okay.
quickly can you get that first increase? Yep.
Wow. Okay. Again, hope you guys are writing this stuff down. I think that people want high limits and they automatically think, okay, I need to go to credit union. I need to go to Navy Federal. And again, these are
Mhm.
alternative guys. You don't always have to go that route, but these are some great alternatives. And
Mhm.
any other banks that have you essentially the chances of having a higher limit credit card, as starting out.
Yeah, I just want to make a quick note about Synchrony in particular, because they're known for decreasing limits and
Mhm.
closing accounts. Banks are in full control at all times. A lot of people think that your credit
Okay.
limit is set in stone. It's not.
Mhm.
At any time, they can review what they call it a universal default, where they can look, they soft pull your credit every month usually. And if they see something they don't like, maybe your behavior or performance with another bank, they can even use that
Wow.
as a point to use against you to lower your credit limit, even though you're good with them.
Yeah.
Just because you're running up 90% usage on another card could be a reason they decrease you. And
Mm.
that limit, for example, I have the X1 card, right? I
Okay.
was testing that card out. And I remember I was moving and I put like a $10,000 charge on that card. I had a $15,000 limit. And guess what
Yeah.
they did?
What they do?
They locked and restricted the card. I've never been late, never missed a payment,
Yeah.
always paid. I pay weekly. And and they restricted, say you cannot make any more charges on that card until you pay off that $10,000 balance. You would think I'd be able to use the full available
The
credit limit?
remaining, right.
No way. So
Wow.
always be aware that that could happen.
It's like you said, they could pretty much do anything they want to do at any time.
Mhm.
I don't like the randomness though. That's what's killing me. It's the randomness for me, to be totally honest. Like I get certain things. If I have a pattern of, hey, my balance is slowly increasing, I'm kind of late, that kind of deal. You're seeing that I'm, got some other cards and things of that sort of my credit report, and the behavior is similar. I get it. Essentially, where my risk factor is increasing, right? Or my risk
Mhm.
is increasing. If there's nothing that is insinuating my risk is increasing, why do it? But I
Mhm.
also think it too, because the debt is so high right now. It's like, hey, listen, we got to slow some of this stuff down, which is crazy because we're the
Mhm.
ones that's being responsible.
Yeah, yeah. It's always key to remember it's not your money. I mean, you
Mhm.
want to manage your limits and you want to keep them as high as possible and keep those around as long as possible.
Yeah.
But it's not your money, basically.
Got you. Got you. Absolutely, man.
Yeah.
Absolutely. All right, perfect. Now, was Synchrony going to be that bank, or that was just the last piece that you were mentioning, or was that all the banks in general that's
Okay,
giving
so
out?
sure, I want to quickly run down a couple more points here.
Sure. Yeah, let's do it.
So the highest credit limit increase, I found came from Synchrony Bank again. There was one person who got their initial $1,000 Lowe's card increased up to $25,000 in just one big jump. But one of the tried and true Navy Federal came through with their
Every time.
$8,000 increases. So if you want, so I found that most people got either a $6,000 or $8,000 increase with Navy Federal, and they were very consistent. So definitely ask for at least $8,000 when you're dealing with Navy Federal. And then the top spot went to Amex. They appeared 5 times in those data points for increasing your limit or having an increase that was over $10,000. And so they were pretty consistent. So Amex goes in the top there. As far as the highest credit limit for limits over $20,000, Amex and Navy Federal tied for how many times that they appeared.
Wow.
For those above $20,000 limits. And then for 30,000 and up limits, it was Amex, Bank of America, Capital One, Goldman Sachs, and Navy Federal. So I would say if you're looking for, higher limits, maybe that be the top 5. I would say Amex, Bank of America, Capital One, Goldman Sachs, Navy Federal. They've been shown to give you some of the highest credit limits. And so the highest, if you want to know, the highest credit limit I came across was from Bank of America at $96,000.
Wow.
Yeah.
You know what? I've been seeing that too. Man, people sleep on Bank of America and a lot of these old school banks, like even Capital One, like you said, these banks, they've been around for a long time. And I know Navy Federal know that they're the flavor. And when so many people are kind of coming in and you don't know, it's like a mixed bag. You don't know who these people are because everyone's trying to figure out ways to kind of get in. It's not as exclusive as it was. And versus like Bank of America is not just approving everybody, So to even have a card with them and to still have a card with them, I've seen like higher limits, like, over just looking at thousands of credit reports, like people that like a lot of my clients that are in the 700s to 800s and just seeing even some of the offers that they're getting. And it's like, man, Calvin, I started out with, these higher limits. So again, just so you guys know, what Cal is talking about is true. And I've been seeing that, like not just recently, but over the years, just because, again, they have the financial backing. They know the risk factors. They know their customer avatar looks like, say, okay, the chances are that this person will do this, So I think that's most definitely information that everyone should have in place. So, well, listen, Cal, we greatly appreciate you, man, dropping all the gems, keeping us posted. So listen, this is why we go to Cal for the most updated personal credit card information. He knows about business credit cards as well, but I know that these are some recent changes and updates with personal credit cards that everyday people use. Right? I know we got videos on Navy Federal. I know we got videos on just various things. And but again, this is the normal, natural, I would say, path that people are used to from Capital One and other credit cards and so on and so forth. But listen, man, we greatly appreciate you studying those data points. Keep that information coming. And listen, if you all made it to the end of this video and you guys want to see Cal come back to the channel again, go ahead and put in the comments, bring Cal back. All right. And again, in the meantime, until we bring him back, make sure you all stop by his YouTube channel. Not only is it blowing up, but he literally gives the information. Whatever credit card is in your wallet, I promise you there's a 95% chance he's done a video on it. And so you all can get that accurate and updated information. So thanks again, Cal. We appreciate you being on today, man.
All right. Thanks, Calvin.
All right.